All right, those are the opening bells on Wall Street, which means the trading day is officially open for business. I'm Yahoo Finance Executive Editor Brian Sozzi, and this is Opening Bid. Opening Bid. All right, here on Opening Bid, we bring you the investing analysis you need to know to unleash the power of your portfolio. We're digging into what's really moving stocks, giving you the unbeatable context to make decisions with your money. Let's get a quick check of the major averages as we kick off the trading day. Seeing some resilience in the major averages. Of course, all eyes on what happened between the U.S. and Iran over the weekend. U.S. attacking Iran key nuclear facilities. You would have thought that we'd see a lot, really some more big losses here off of that news, but so far markets are holding tight. Now, we're kicking things off with your daily guide to the biggest market drivers of the trading day. Here's what I'm watching. Number one, geopolitical risks in the market. From oil to the stock market, we've got you covered. Number two, defense stocks like Northrop Grumman and Lockheed Martin are catching bids. Northrop in particular is of interest as it makes the B-2 bomber. Number three, Circle stock continues its unrelenting post-IPO rally. Stock is up a sizzling 722% from its $31 IPO price. The company debuted on the NYSE on June 5th. All right, now here to mix it up on all these topics is our esteemed panel, Chad Morganlander. He is Senior Portfolio Manager at Washington Crossing Advisors. Tim Urbinowitz, Chief Investment Strategist, Investor ETFs. And of course, Yahoo Finance's Julie Hyman. Panel, good to see you here. Julie, let me start with you here. You're really the markets, they're showing really a lot of resilience, and I think that surprises investors. Now, you've covered a lot of different geopolitical shocks throughout your career. Help us understand why we might be seeing some of that defense.
Well, I will say, first of all, it's not unusual, right, to have a geopolitical shock, to have the markets react a little bit right away and then kind of fade it quickly. That has been mostly the playbook. But really, in this case, as in many conflicts in the Middle East, it all flows from oil and the effect on oil prices. Really, not even just the Middle East, right? We saw that with Russia's invasion of Ukraine as well, and the effect that that had on oil prices and natural gas, and then the ripple effect from that. So in this case, as we know, there is a lot of focus on the Strait of Hormuz, which Iran controls. 20% of the world's oil flows through the Strait of Hormuz. A lot of it goes to China. So it's not in Iran's interest to close it down, but it has been threatening to do so. The markets right now don't seem to be pricing in that it would be shut down entirely, but we are seeing some estimates out there that the likelihood is increasing that it could happen, and then you could see some pretty dramatic upside to oil prices.
Chad, we heard Julie mention, I would say, two of the most important words of the market this morning. That is pricing in. In your estimation, how much geopolitical risk is priced into markets here?
Very little right now. As you can see with oil, Julie astutely points out that Straits of Hormuz is perhaps the tail risk. That is not in the best interest of Iran to pursue that, due in part because China gets most of their oil, or they get a portion of the oil, from Iran. So they will not want to do that. This is going to be a slow burn. We don't think that this is going to end over the next week or two. Israel is going to pursue a very steady drumbeat of pressure on the Iranian government, with the hopes that over the next 2 or 3 or 4 months that there will be a slight political disruption that will cause perhaps a chain of events that will turn over the government there.
Tim, Yahoo Finance platform rocking this morning, notably the Yahoo Finance trading ticker page, seen a lot of rotation or early interest into Chevron, Exxon, those big oil major stocks. Do you fade that rally, though?
Well, Brian, I think the way that we're looking at those stocks, and really the whole concept of energy and the Middle East crisis in general, is just looking at the impact on inflation more broadly. You know, you talk to a lot of folks, they're looking at, hey, CPI, only about 6% of that basket is made up from energy, and that's true. But we take a step back, you look at the impact more broadly. Energy prices explain about 21% of the variation in headline CPI. So right now, we think it's really important to be thinking about ways that you can really inflation-proof your portfolio. We think energy prices are going up. A lot of those names that you just mentioned, we think are going to be beneficiaries of that move higher. But taking a step back broadly, we want to think about this in the context of how do we really add some inflation-proofing to our portfolios right now.
Chad, real quick, you heard what Tim was saying on inflation. You think we're looking at a potential inflation shock in terms of data? We're going to get a lot of inflation data this week, but that will be for May. What's the inflation-related risk to markets?
Well, we think it will be temporal at best when it comes to the oil shock. That perhaps, if there is a tail risk surprise here, that oil shocks the market temporarily. But I think market participants are actually looking past that. The bigger risk is at one time, or perhaps the more long-tailed risk about tariffs. And the market is actually, we believe, looking past that as well. So you may get one spike in 2026, and then after that, you perhaps could get a deceleration.
Julie, I know you want me to ask you more about energy stocks. I know you're a big energy buff. I'm not going to do it. I'm also looking at defense stocks off this move. Northrop Grumman, Lockheed Martin catching bids here, as you would imagine after a situation like this. I didn't realize this, Julie, but Northrop Grumman gets about 2% of its sales, or $500 million from the B-2 alone. How long do you think this trade, this trade could have, or it peters out after the news disappears?
I mean, even the moves that we're seeing today are pretty muted in the big defense stocks, right? We're not really seeing moves of more than 1% across the board. Boeing, which makes the so-called bunker buster bombs, last I checked was actually moving lower. You see RTX is moving lower. So it doesn't feel like there is necessarily an immediate reaction here. That said, many of these stocks have rallied big already this year. So there already has been something of a pricing in of an increase in geopolitical conflict and the effect that that's going to have on these stocks. The other thing to keep in mind is even if you have an uptick in this kind of conflict, despite the best efforts of, say, DOGE, for example, the federal government, including the military-industrial complex, is still a large, slow-moving organism. So something like this happens, do you see the government coming out and then, putting in other orders immediately? I think that remains to be seen. And so, yes, we're seeing some of these stocks up a lot. There was an interesting note from Jefferies this morning that you actually flagged to me that pointed out the companies that have the biggest exposure to that region of the world where the conflict is having. There's a company ticker ESLT, which according to Jefferies has 29% of its sales to Israel. So there you could see more of a direct effect than maybe some of the largest U.S. defense contractors.
Julie, I appreciate all praise. So keep it coming throughout the show. That's why we have you here on the Ensemble. Chad, in terms of defense stocks, how much of your portfolio, if this is going to be a summer of geopolitical risks, how much of your portfolio should be allocated to defense names?
So, Brian, for full disclosure, we own Lockheed Martin in our rising dividend portfolio at Washington Crossing Advisors. We've owned it for at least 3 years. And we expect over the next 3 to 5 years that revenues will continue to grow. We own roughly about 4% to 3.5% position in our portfolio.
Chad, real quick. Why Lockheed over Northrop?
Although Northrop is a wonderful company and it's growing, profitable, and well capitalized, we thought from the valuation perspective that Lockheed was more attractive. It's sitting at a 2026 multiple of roughly 15 times. It has not had the big multiple expansion like their competitors, and we believe that there's a seam of opportunity as there's been an overhang of uncertainty regarding the F-16 or the F-24 fighter jets. I mean, that to us is one that we believe has that seam of opportunity, and we want to take advantage of it over the long run.
Tim, last word to you on this topic. You're our ETF guy on the panel. Are there more clever ways to play the defense trade besides going to our platform, typing in the tickers like Lockheed Martin and Northrop Grumman?
Well, Brian, I think using an ETF like a PPA that gets you broad exposure probably makes a lot of sense here, especially when you think about this reconciliation bill that's coming out. You're looking at an additional $150 billion in defense spending. You pair that with looking at this conflict, what's going on in Russia, Ukraine. Defense spending is not going down. It's not going down in the U.S. It's not going down globally. And there are going to be winners and losers based on that, based on who wins the contract. So we think using an ETF, getting that broad-based exposure really helps you capitalize on the mega trend that we see taking place over the next year, 2, 3, 4, 5 years.
I know you would be my guy with the clever trade. Julie, a little bit of a hard right turn here to crypto. We saw Bitcoin decline on Sunday on this news, has rallied back over 100,000 last time I checked. But I'm really looking at the move in Circle. And this is a company that is up, the shares are up 722% since the IPO on June 5th. off now, I guess part of it because of the stablecoin news last week. But are we watching some form of bubble in a circle? It's really a parabolic move.
Well, we're seeing, some of the recent IPOs, we're seeing CoreWeave also, not quite as in a straight line as Circle has been, and it's not crypto related, but we've seen some moves there also. So, Circle is the proxy for the sort of regulation trade right now, right? You had the so-called Genius Act passing. You had some news on the likes of JP Morgan saying they might get into a stablecoin. They're exploring that. So the headlines have sort of been piling up in the stablecoin arena, and so people want to maybe surf the wave early on that. I mean, to your point, what's fascinating here is that it's not necessarily matching what's going on with Bitcoin, and Bitcoin is not sort of that safe haven store of value at a time like this. I mean, I've been watching the price of gold as well this morning, Saz, and gold is not going up, which is an unusual thing to see after a military strike like we have seen. So the sort of places that had been maybe stores of value, either traditionally or new school in the case of Bitcoin, it's been interesting to watch the behavior. And Circle is not like, it's not taking on that role, obviously, as sort of the safe haven trade. There's something else going on there.
Well, I'll add a little bit to the hype balloon. Here's what Coinbase CEO Brian Armstrong told me at their Coinbase Summit a week ago. I asked him point blank, will you want to put a bid in to buy Circle? Of course, those companies are very, very intertwined. Here's what he told me.
Both Circle and Coinbase, we're going to be trying to get more USDC adoption. And right now, every bank and fintech company and Fortune 500 is like a new announcement every day. Someone's thinking like, how do we add these to make our business more efficient?
Would you ever want to put an offer in to buy Circle? I mean, you're already so intertwined.
We would always consider it, but obviously it takes two people to have something like that happen. And they're crushing it in the public markets, right? So it was something we'd always consider if they were interested, but I think for now it's going really well.
Tim, you heard there Brian Armstrong, and what amazes me is the market caps on these companies. Circle right now, I believe, is at a $57 billion market cap. You have Coinbase around almost $70 billion. Robinhood is in this vicinity. You have to wonder who is going to win longer term in terms of Bitcoin or crypto trading exchanges. Where are you playing all things crypto?
Well, Brian, I think when we take a step back, you have to evaluate what does the total size of this market look like 5, 10, 15 years down the road. And that's the hardest thing to determine. Once we get that, then you have to figure out what market share and what margins each of these companies are going to maintain, which again is very difficult. So when we look at a company like Circle and you see a 700+ % move, in less than a month, I think you have to take a step back and say there's probably some overvaluation there. And if nothing else, you have a lot more risk that is now priced into the stock than it was when it launched. Those are very big question marks. Obviously, the space as a whole, you look at crypto, this is another mega trend that's not going anywhere. Clearly, you want exposure to the space, but you want to look for those names that have the cash flows, have revenue like Coinbase that are poised for long-term growth as well.
All right, good stuff. All right, everyone stay right there. We'll be back with more on Opening Bid and our stock of the day clue. You need a charger to use the product. Welcome back to Opening Bid on Yahoo Finance. Checking in on the major averages today. Really, you're seeing all the markets kind of hang tough. The market opened down across the board. Now you're seeing green on the screen for the Dow and the S&P 500, NASDAQ under slight pressure. But still, I would say that is surprising action given the U.S. attack on Iran nuclear facilities over the weekend. All right, now let's turn to my stock of the day. That is, drumroll please, Tesla. The company rolling out its much anticipated robotaxi in Austin over the weekend, but only for a select few passengers, a who's who of Tesla influencers. Of course, the taxis drove in a small portion of the Texas city with a Tesla employee in the front seat for safety. Jumping into the Yahoo Finance platform, you can see this hype test comes during a lot of hope for Tesla's earnings potential. The company has a trailing price to earnings multiple of 184 times. You're actually seeing that correctly, guys, and a forward PE of 166 times. For perspective, the S&P 500, it's only at 21 times. Still with me is my roundtable of pros, Chad Morganlander, Senior Portfolio Manager at Washington Crossing Advisors, Tim Rabinowitz, Chief Investment Strategist, Innovator ETFs, and of course, Yahoo Finance's very own Julie Hyman. Julie, I know you're a big Tesla fan, so I think you're going to set the tone for this one. Robotaxis floating around streets, driving by themselves in Austin. I'm trying to figure out when this actually starts making money for Tesla, because you saw the PE multiples I just mentioned here at the top. This stock continues to be priced for perfection at a time where earnings estimates for Tesla continue to tank.
Earnings, if you're a Tesla bull, you don't care about numbers,
Wow.
right?
I knew I started with the right person here, Julie.
You care about vibes. You care about the future. You care about the $1 trillion autonomous opportunity that Dan Ives, whose pictures we were showing, is always talking about here, and other bulls like Kathy Wood over at ARK. But you really, sort of put your finger on it when you said it's sort of influencers who are invited to this thing. You know, Jordan Klein, who's a desk analyst over at Mizuho, in his morning note, he said, first of all, he said this seems like a yawn, the whole event, but he said Tesla controlled the event and tests a lot, handpicking many of the test riders, knowing they are big Tesla supporters.
I didn't see you there, Julie.
Like
didn't see you.
What I would like to see is someone who is not a huge Tesla bull get in one of these cars and give me a review.
Chad, I didn't see you out there in Tesla land driving these taxis around. I love what you said about your holding of Lockheed Martin at the top of the show. 15 times forward earnings. What do you think when you see Tesla getting driverless cars out there, but the forward P is 166 times? Has to drive you crazy, right?
Brian, there's a lot of jazz hands going on here. It's 10 times revenue. You have a multiple that's insane. And then there's another company, a little company called Alphabet, which, for full disclosure,
yeah, we've heard of them.
I own personally, and Washington Crossing owns. And that's trading at a 16 times next year multiple. And they have something called Waymo. So Waymo has been proven, it's working in many cities. And we believe that this whole robotaxi idea that you're going to let your car go out in the middle of the night and pick up drunk people is perhaps, just to make money, is perhaps a little bit foolhardy. So we'd be more mindful about owning Tesla. We would pick Alphabet instead.
Chad, would you actually get in one of these to drive? Would you take a ride in this?
I would definitely take a ride in it. And you know what? This technology is wonderful. Don't get me wrong. This is perhaps going to work. But Waymo is light years ahead of them. They're perhaps going to just sell their software package to other companies like General Motors, Toyota, and whatnot. And they're going to go the route of Microsoft when it comes to the software distribution. They have yet to announce that, but it's pretty obvious what their game plan is.
Tim, I know you're ditching all your cars and you're going to be a robotaxi fan. I just see, I get that vibe. I just get that vibe.
Yeah, it's an interesting one, and I kind of see both sides here. I hope Julie doesn't kill me, but I'm kind of in the same boat there. You look at that multiple; it's hard to imagine them growing into that in any short period of time. And Brian, as with anything that we've seen from Tesla, it always takes longer than Elon thinks and investors think. So we have to be really conscious of that. But I do think the growth story or the innovation story is there, and that's going to drive hype, and that's going to drive the stock price in the short term. A lot of what our clients are doing is using a risk-managed approach to get exposure to stocks like Tesla and the NASDAQ 100 as a whole with strategies like QFLR, where they're putting a floor, a 10% floor against losses on their NASDAQ exposure. But they're still maintaining that upside. If this hype continues to drive these stocks like Tesla higher, they're participating, but they also have that risk management in place. With that multiple, that stock could fall pretty hard, and other stocks there as well. So we think that's a prudent approach right now.
Hey, Sus, don't get me wrong. I'd love to ride in one of these things, right? Or I'm psyched that Waymo is coming to New York City. Bring me the Tesla robotaxi. But, when you're coming at it from an investment perspective, you have to separate what you think is cool and what you think is a good investment.
All right, let's leave the panel there. Julie Hyman, I'll see you back at your desk. Chad Morganlander, good to see you. Tim Rabinovitz, appreciate you guys coming on.
Thank you.
All right, investors awaiting a response from Iran following U.S. attacks on its nuclear sites over the weekend. Iran has vowed to retaliate and kept up attacks on Israel, fueling fears of a wider war in the Middle East. Stocks holding steady today despite the turmoil. Joining me now to discuss the risks facing investors is Ian Bremmer, Eurasia Group founder and president. Ian, always a real pleasure to get some time with you. So some of your thoughts on why are markets, you think, so resilient here on the morning, this morning after these results?
Because the Americans don't want the war to continue. They want it to be one and done, as Trump did when he assassinated Qasem Soleimani in his first term. And they believe, with some evidence, that the Iranians are very risk averse here. They don't have much they have been able to do against Israel. And frankly, they have even less that they're capable of doing really against the United States. The markets also are very focused on oil. And so far, Iran's own oil export capabilities have not been touched by the U.S. or by Israel. And they believe, and I think appropriately, that as long as that is the case, that Iran is very unlikely to severely disrupt the Straits of Hormuz, which is what would lead to a much more significant uptick in the price of oil. Now, all of that does not reflect the fact that the reason the Americans engaged in strikes, in part, is because Iran didn't have the capacity to respond to Trump's entreaties to engage in direct negotiations. They aren't communicating well internally. They've shut down their internet. They're in hiding. They're not meeting all together. So the potential for mistakes and rogue actions in this environment is actually quite high. I think the markets aren't worried about that, but they are pricing in a level of risk aversion and reluctance to precipitate further escalation on the part of the Islamic Republic.
Ian, you mentioned the Strait of Hormuz. How important is that for global trade?
It's critical. It's one of the most important transit points, bottlenecks for global energy and a lot of other shipping, chemicals, manufacturing, trade, and the rest. There are already a number of oil tankers that have changed their transit plans away from the Straits just in the last 24 hours, going around the Cape of Good Hope. It's a lot more expensive. It takes a lot more time. But there's not a belief that it's going to be disrupted by military attacks. And I agree with that assessment at this point. So I'm not surprised that the markets are responding to lots of oil production, relatively soft demand, and not an expectation that the Middle East is going to become a broader conflagration.
Ian, real quick before I let you go, what is the next big risk off this event that investors need to be looking for?
That the Israelis have not decided that this is over. And they have spoken of regime change in the past. The defense minister has spoken about taking out the supreme leader himself. So I think we want to watch very carefully if the country that precipitated these strikes and got the Americans in, Israel, are they prepared to continue to engage in strikes? And what does that do to Iranian capabilities on the ground? What does that do to Iranian leadership? That's the core dynamic of the three parties that are involved in this fighting right now to watch.
All right, Ian Bremmer, always a treat to get some time with you. Appreciate the perspective.
Be good.
All right, coming up, Yahoo Finance's Market Catalysts after the break.